Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex world of corporate finance and uncover the stories hidden within their filings. Today we are diving deep into QuantumScape's latest report, and let me tell you, their future plans are as electrifying as their battery technology promises to be. Before we jump in, if you love getting these clear, no-nonsense breakdowns of important financial documents, make sure you are subscribed. And if you want to chat about these reports, join our Discord community linked right below for exclusive discussions. Alright, we are looking at QuantumScape's quarterly report, a crucial document that gives us a snapshot of how they are doing right now, especially after September 2025. This report is essentially their mid-year checkup, showing us their financial health and what challenges and opportunities lie ahead. Let's kick things off by looking at their balance sheet. This tells us what the company owns and owes. As of the 30th of September 2025, QuantumScape had total assets of about $1.34 billion. They have cash and equivalents of over $225 million. That is a solid chunk of change, which is good for a company still in development. Their marketable securities are also substantial, bringing their total current assets to over $1 billion. On the flip side, their total liabilities are around $127 million. This means they owe less than they own, which is a positive sign for their financial stability as they navigate these early stages. Now let's talk about how they did operationally. For the 3 months ending the 30th of September 2025, their total operating expenses were about $115 million. This is mainly in research and development and general administrative costs. They are spending heavily to innovate, which is expected for a company at their stage. Looking at the 9 months ending the 30th of September 2025, their research and development expenses were over $288 million, and general administrative costs were close to $73 million. This large spending on R&D clearly shows their commitment to advancing their battery technology, even though they have a substantial net loss of over $334 million for these 9 months. It's important to remember they are still building their business. When we look at the stockholders' equity, we see the total equity at over $1.21 billion as of the 30th of September 2025. This is up from about $1.15 billion at the end of 2024. This increase, even with losses, likely comes from new investments or stock offerings. It shows that investors are still backing their vision. The cash flow statement is crucial. It shows how money is moving in and out of the company. For the 9 months ending the 30th of September 2025, QuantumScape used about $186 million in operating activities. This is largely due to their ongoing investments in research and development. In investing activities, they had net cash outflow of over $17 million, mainly from purchasing marketable securities and property and equipment. But where did they get cash from? Financing activities, they had over $285 million in cash provided through financing activities for the 9 months ending the 30th of September 2025. This significant inflow came from the ATM offering, where they sold a lot of their stock, and from the exercise of stock options. This shows they successfully raised capital to fund their operations. QuantumScape is still very much a development stage company. They are creating solid-state lithium metal batteries, and as of September 2025, they hadn't made any money from their main business. This means their focus is entirely on innovation and getting their product ready for the market. They mention a significant relationship with Volkswagen Group, which is a major investor holding about 25.2% of the company's voting power. This partnership is key to their strategy. Let's quickly look at how they value their investments. They have about $993 million in fair value of marketable securities as of September 2025. Most of this is in level 2 securities, which means their value is based on observable market data, like prices for similar instruments. This is a good sign, as it suggests their investments are not overly speculative. Diving into their property and equipment, we see they have about $250 million net. This includes machinery and equipment and a significant amount in leasehold improvements. This indicates they are building out their facilities and investing in the infrastructure needed for production. Depreciation and amortization expenses are also substantial, showing the wear and tear on their expensive equipment. QuantumScape leases its facilities and some equipment. They have a significant operating lease liability of about $35 million long term, and a finance lease liability of over $29 million. In July 2025, they even entered into a lease termination agreement, which resulted in a loss of about $8.3 million. This shows they are actively managing their real estate footprint, perhaps consolidating or optimizing their space as their strategy evolves. Now, for the less fun part, legal matters, QuantumScape is involved in several shareholder derivative lawsuits and some wage and hour actions. They've accrued about $4 million for these legal matters as of September 2025. While these are not individually material, the aggregate amount and the ongoing nature of these lawsuits are definitely something to keep an eye on. They also have other commitments such as minimum purchase agreements, totally around $6.2 million for goods and services. In terms of stock, as of the 30th of September 2025, they had over 558 million shares of Class A common stock issued and outstanding, and about 42.5 million shares of Class B common stock. They also completed a significant at-the-market offering, raising over $263 million in the first 9 months of 2025, truly completing that offering. This shows continued investor confidence and their ability to raise capital when needed. They also have equity incentive plans with millions of shares authorized for options and restricted stock units. The relationship with Volkswagen is getting even closer. In July 2025, they entered into an amended collaboration agreement with PowerCo C, Volkswagen's battery cell company. PowerCo has agreed to contribute up to $130.7 million over the next 2 years for a joint project, contingent on reaching certain technical targets. This is a huge vote of confidence and a significant influx of potential funding, though right now no payments have been received. This deal highlights the deep integration and reliance on their major investor. Let's look at what management says about their condition. They are still a pre-revenue company, expecting significant expenses and continuing losses for the foreseeable future. They have a clear focus on product development, highlighting advancements in their solid-state separator and battery technology, including their QSE-5 product and successful demonstrations. They're also working on improving cathode performance, quality control, and production throughput. Now, let's get to the risky business. The risks section is always eye-opening. QuantumScape faces significant challenges in developing and producing their solid-state batteries at scale. They are worried about production issues, cost control, and whether their technology will truly meet customer demands. A big one is their reliance on Volkswagen and PowerCo. If milestones aren't met or if the relationship sours, it could severely impact their business. They also face intense competition in the battery market, with both established players improving their technology and new contenders emerging. Consumer adoption of electric vehicles is also a major dependency. They acknowledge the volatility of their Class A common stock and the potential for dilution from future stock sales. They are also aware of the risks associated with intellectual property protection and potential litigation. Plus, like many companies, they are subject to evolving global trade policies, environmental regulations, and the general uncertainties of the global economy, including inflation and interest rates. Interestingly, in September 2025, Mohit Singh, their Chief Development Officer, terminated a trading plan for selling up to 2.2 million shares of Class A common stock. This might signal a shift in their confidence or strategy regarding stock sales. Overall, QuantumScape is in a high-stakes race to revolutionize battery technology. They have a clear vision and significant backing from a major automotive player. However, the path forward is fraught with technical hurdles, intense competition, and economic uncertainties. They are burning through cash to innovate, and until they start generating revenue, their reliance on external funding and their major partner will remain a critical factor. The success of their QSE-5 battery and the deepening collaboration with Volkswagen are key indicators to watch. The market's reaction and their ability to overcome production challenges will ultimately determine if their electrifying future becomes a reality. What is your take on QuantumScape's progress and its future prospects? Let us know your thoughts in the comments below. And if you found this deep dive valuable, please hit that like button and subscribe for more corporate breakdowns. Don't forget to join our Discord community via the link in the description. Thanks for watching. See you next time on Corporate Decoder.